Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the financial market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. The first part of this video will be about reviews, and these are the names that I have covered in past videos, and I will do a quick review on each of them. Next, I will begin covering these names and review them in upcoming videos. I've put in timestamps, so please use it to skip to the names that interest you. As pointed out in the video on the 29th of September, Eurodollar has completed its double top A bearish pattern, and the textbook target is at 1.0802. For now, I will take guidance from the daily chart, the one that you're looking at, because the weekly chart is a longer term chart that takes time to develop. Let me just show you how the weekly chart looks like. So the weekly chart is still showing that the symmetrical triangle, the bullish symmetrical triangle that was completed back in July, is still valid. This decline and possibly future declines can still be qualified as just a correction before bouncing off supports, probably at the Ichimoku cloud around 1.0865. Like I said, textbook targets do not always have to be fully met. It can just be 60 to 70% met before resuming the upside. So in the longer term, on the weekly chart, this bullish symmetrical triangle is still valid. The textbook target is much higher than this. In upcoming declines, should be viewed as just a correction before bouncing off supports to resume the upside. On the sterling dollar, it has completed its rising wedge, a bearish pattern that I pointed out on 29th of September. Textbook target is at 1.2800, but caution that there is a support, psychological support at 1.3, previously bounced off on the 11th of September to resume the upside. So I'm cautious that this psychological support could again bounce sterling dollar higher. But of course, once there's a breakdown below 1.3, then I believe sterling dollar should hit lower to 1.28. And I'm not ruling out further downside below 1.28 since it's already below the cloud by then. I have not covered dollar Swiss since the video on the 18th of August, in which I said that I am waiting for further price action development to prove that the second shoulder is forming, second shoulder of a head and shoulders bottom, as you will see on the weekly chart. So I now believe that with price action rallying this week, the second shoulder is likely to have been formed. Of course, we need further confirmation. We need more credibility on this second shoulder. And we will get that if we see dollar Swiss moving much higher going forward. So I believe this week's advance is the start of further upside. And we could get to around the Ichimoku cloud resistance around 0.8790. And once there is a break above this, then we can get even more conviction that dollar Swiss actually has a bullish intent. Of course, the completion will take much longer. It is via a weekly close above the neckline at 0.9224. In the video on the 18th of August, I noted that EURUSD is still in the corrective phase of the bullish pattern called a falling wedge, which got completed back in February. So we have the completion and this downward move, I call it a corrective decline, part and parcel of pattern completions before the resumption of the upside. So I believe even though EURUSD has fallen, I still think that we are still in part of this corrective decline. But let's switch to a daily chart, and I will show you that it is developing a new chart pattern called a symmetrical triangle. So even though the weekly chart shows a bullish pattern, we have to respect the shorter term chart, which is the daily chart. And on the daily chart, it is forming a symmetrical triangle, which is a neutral pattern. And the direction, that the outlook will be determined by whether there's a breakout above the resistance trend line or whether there's a breakdown below the resistance trend line. But for now, I am biased to the upside for EURUSD, simply because there were two bounces off the support trend line, leading to a close above the 20-day simple moving average. So therefore, I think the next move for the EURUSD will be towards the upside. And of course, once there is a breakout above this resistance trend line, then we can confirm that EURUSD is still bullish. Textbook target is at 0.9745. Alternatively, if there is a breakdown below the resistance trend line, then I believe the bullish pattern on the weekly chart will eventually be invalidated, because the textbook target for this breakdown is actually at 90.69, much lower from here. As noted in the video on the 15th of September, dollar yen eventually completed its falling wedge and has since rallied. Now, dollar yen last closed within the Ichimoku cloud on the 4th of October, and in doing so broke above the resistance at 147.21 over here. So I believe this has given more upside strength to dollar yen to challenge its next resistance at 149.40, and once this breaks, I believe dollar yen would hit to its textbook target at 152. The last update for dollar peso was on the 15th of September, in which I said that dollar peso is forming a rising wedge and has completed this bearish pattern. The textbook target is at 17.55. Now, since then, dollar peso had a corrective advance over here, and we saw at least 3 rejections at the resistance trend line, formerly a support trend line, but now a resistance trend line. And eventually, dollar peso failed to hold above the 20-day simple moving average and last closed within the Ichimoku cloud on the 4th of October. I believe this has given an extra downside bias to dollar peso to challenge further downside. Of course, the first support will have to be broken in order for dollar peso to move much lower. First support is at 18.9, followed by the 18.59 level, below which I believe dollar peso has enough strength to push all the way down to its textbook target. I remember telling you in the last video on the 29th of September that despite the Federal Reserve's cutting interest rate, the US government bond 10-year yield is likely to still rally. And this week we saw a break into the cloud and almost reaching its psychological resistance at 4%. This is a result of the completion of a falling wedge, a bullish pattern that has a textbook target at 4.3%. Now, if the 10-year yield manages to break above the 4% psychological resistance, then it should easily break above the cloud and head towards the textbook target. But even if it gets rejected at the 4% level, I will not turn bearish on the 10-year yield just yet. I believe this rejection will result, if there is a rejection, I believe the rejection will result in a decline, but I will see the decline as just part of the corrective phase that commonly occurs after a pattern completion, and upside is expected to resume after bouncing off some supports. I will now move on to new coverage. There are 3 new coverages in this video. Dollar CNH is the first one, and I believe dollar CNH has just turned bullish because there was a breakout above the resistance trend line of the falling wedge, a bullish pattern. The textbook target is at 7.2318. Moving on to Brent, I believe Brent just completed a cup and handle bottom, a bullish pattern on the 3rd of October. This bullish pattern has a textbook target at 81.76. Now, take note that the price action over here on the 4th of October is excessively above the upper Bollinger. And we can see that the wick over here, the price action was rejected by the cloud resistance, both of which suggests that Brent is likely to be lower first. And this is very common after pattern completions. There usually are corrections before resuming the upside. So I expect, even though I'm now bullish on Brent, I believe the next move for Brent will be lower first, and it meets some resistance very likely at 75.11, the neckline, before bouncing off this support to resume the upside to extend its target to 81.76. The last new coverage for this video is on Novo Nordisk, a Danish pharmaceutical company famous for diabetes case products. It completed a head and shoulders top last week via a breakdown below the neckline at 826.7. The textbook target is at 619.6, but price action is currently excessively below the lower Bollinger, so I expect a 1 to 3 weeks worth of a bounce higher before meeting some resistance, probably at the neckline or somewhere slightly near or above the cloud, before getting rejected to resume the downside. Of course, there is a support at 721.4 that can again bounce Novo Nordisk higher, but once Novo Nordisk clears this support, I believe it should hit much lower to where the textbook target is. I will now move on to the names that I previously covered, but I will no longer cover in upcoming videos, either because the patterns have been invalidated or their textbook targets have been met. First up is Swiss yen. I said in the last video that Swiss yen completed a head and shoulders top, a bearish pattern, but I called this upward move a correction. Then again, the latest move this week on the 4th of October actually closed above the last high, the shoulders high. Therefore, it has invalidated the head and shoulders top. This bearish pattern is no longer valid, and I'll be waiting for a breakout above the cloud resistance, currently at 173.5. A breakout above the cloud will be bullish territory for Swiss yen. I expect a much higher Swiss yen going forward, firstly targeting 145.06. Then it should, once this breaks, it should be targeting the next move to 180 for Swiss yen. The last review I had on Netflix was on the 8th of September, in which I said to expect further downside on Netflix since there was a completion of the rising wedge, a bearish pattern. But since then, Netflix has broken and held above its resistance at 691.72. Therefore, I believe this rising wedge has been invalidated, and we should then revert to where the last what the last pattern suggests. The last pattern for Netflix is a cup and handle bottom, which is a bullish pattern that has a textbook target at 804.52. So I believe the next move for Netflix will be to continue its upward move towards this 804.52. I will be ceasing coverage on Netflix going forward. I will now cease coverage on Baidu as well. This is because the textbook target of the falling wedge was reached, 107.6 was reached last week, and this whole bullish pattern is now resolved. I will still maintain the view from last video that due to a gap up, or rather gap ups in price action, there should be declines going forward to fill these gaps. Also, I'm just speculating that the rejection at 113.7 could result in a decline first before resuming the upside. And if this happens, if Baidu declines before resuming the upside, Baidu could actually form a head and shoulders bottom, a bullish pattern, but that is on the weekly chart, and I will start covering this once there is a rebound. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.